The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Hey, we're going to cut with the normal open just to try to not hack any longer. Still in pretty good shape. We recovered from that nasty cold that was going around down here in South Florida, but I still have some of the hack. So I would love to hear from you. Hopefully you had a great holiday. Maybe many of you are still on a little bit of a vacation out there. So thanks so much for joining us. I'd love to hear from you. You got a couple different ways to do that. You can always send me an email, steve@tfnn.com. Inside the subject heading, my preference is that you put radio show question. And then, of course, inside the Tiger's Den, well, any ping will do. You can instant message me privately or otherwise. And then, of course, you can always let those fingers do the walking. That's right. You can send me an email, steve@tfnn.com. Well, I think I already did that. You can give us a call. 877-927-6648. So let's go ahead and get to these markets out here on to wonderful Wednesday. Yeah, it is December the 26th right now. The Dow up 451 points. It's a little over 2%. S&P's up over 2% as well. That's 51 points. She's trading at 2401. NASDAQ 100 up 3%. Trade out at 6087. It's the NQ where we're actually going to go ahead and start. So let's start here with the NQ. And the reason is it led things down. Let's see if it's going to go ahead and lead things to the upside. Now, let me get rid of the retracement. We'll go ahead and put this in here. What's really important about today's session, and it will be about the end of the day, so we can't really call the market here at 1:08 in the afternoon. But what we can do is say that if the NQ finishes up by one little point, 1 point, 1/10 of a point out here, if the candle session today is green at all, you have a bullish reversal candle. You have what's called a key reversal session. Now, the reason that it's called a key reversal session is because of three things. You need three things, three elements in order to be able to call a candle such a candle. First, you need to exceed the high and low of the prior candle. Well, the NQ has done that. Second, you have to be coming from an over, in this case here, an extended condition, or what we'll call oversold. Well, we know that we're there. We can use the A to B equals CD patterns as well, which we will, by the way. We'll go ahead and put those up on the screen for you. And so we're at that extended condition. And the third element is you just have to finish, in essence, one tick in the opposite direction of the trend. Now, why is that important? Well, one of the reasons is because what the NQ has done today, if it finishes like this, if it does not finish in the red, then what you have is you have an actual Gartley buy pattern. Now, the Gartley buy pattern requires you to have an A to B equals CD. In this case here, we're looking at the 1 to 1.272 A to B equals CD pattern to the downside. You see, only 60% of the time are we going to get a 1 to 1 A to B equals CD. The other times, it's going to be some type of expansion of that A-B leg out there. That expansion could be 1.272, such as today's. It could be 1.618. Which it would be if we don't get a bullish reversal candle today. But we do have that in place out here. And therefore, what we've got inside of the NQ is a Gartley buy. Now, you may say, what do you mean Gartley buy pattern? Well, actually, if I do this out here, give me a second. I'll put up Stevie's version of the continuous contract out here, and then you'll be able to see that. And that is where there was a huge run to the upside, in this case, which we know took place from back here in February of 2016. A huge run to the, oops, sorry, didn't mean to do that. A huge run to the upside. So here's your run to the upside out here, and this is actually your first A to B equals CD to the downside inside of the NQ. Now we'll stay with this here, and as we stay with this, there's always 5 outcomes of every Gartley pattern. We don't know which ones are going to be fulfilled, but if we do take a look at the outcomes number 1, 2, 3, and 4, outcome number 1 is the so-called dead cat bounce. It's the 0.382 retracement. The 0.382 retracement if we get a key reversal today, says the minimum rally that you should anticipate inside the NQ is 65.58. Now, we're going to give you some other things to pay attention to confirm this by the end of today's session. But 65.58, we're at 61.14 now. So that's another 340 points, if my math is correct, to the upside. But price does not have to stop there. More often than not, you get a 0.618 retracement. That takes you up to 7,014. Yes, as we speak at 1:11 in the afternoon, the NQ has completed an A to B equals CD to the downside, and therefore it's also completed a Gartley buy pattern. Now, what else is it that you're going to pay attention to inside of the NQ? I would say you're going to go ahead and pay attention to the level of 6101.50 to be exact out there. Now, that just happens to be a price point in time when the Earth was furthest from the moon during the current lunar cycle. Hey, by the chance, did you see that big old full moon a couple nights ago? It was a beauty out there. Yeah, it was. So right now what we're watching here from an intraday standpoint, an end of the day standpoint, the confirmation that the NQ wants to make that move is going to be a close above 6101.50. You say, but Steve-O, if it doesn't close above 6101.50, what does that mean? Well, it doesn't mean that we don't have a Gartley buy. It just means it's just not going to be really easy out there. That's what it means. But what happens if price does close above 6101.50? Then you've got a Doble-Guy confirmation out there. Now, I don't know where that came from and what that really means, but what I do know that means is you would have a confirming signal on top of the Gartley buy pattern inside of the NQ. Now, to go along with that, what you'd really like to see is you'd like to see the ES mini close above 24.2375. We'll just call it 24.24 to make things easy. Now, the Russell 2000 and the NQ, as we take a look at these 30-minute charts here, these are the ones as of 1:13 in the afternoon that are confirming that price is broken above a key level of resistance. Inside the Russell 2000, that number you're going to be watching today is 1,300. 1,300. Now, look, I'm not saying that we're not going to see more downside action in 2019, January, February, maybe not. But what we do have that we haven't seen inside the NQ, if I haven't said it, is a Gartley buy pattern since the February 2016 lows out there. So that's what we want to be watching throughout the rest of the day, these levels out here. I wish that I could tell you that there were some type of daily profiles out here that we could look at for support or resistance. Well, we can for resistance. And as an example, inside the NQ, the resistance is up at 67.82. I don't recall if that was a number that I don't think that was a number that we looked at, but it would be 67.82 would be the number. But there's no level of support that we can identify here. We take a look at either a weekly or a daily profile for the equity futures contracts. You talk about that New York Stock Exchange coming from an extreme oversold condition. Well, that's what we've got going on right now. So, yes, you've got the numbers to be paying attention to let you know whether this rally or counter-trend rally is going to continue. And it could be up, and away. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Now, one of the reasons that we were focusing in on the Russell 2000 and the NASDAQ is that those are the two equity futures contracts that have generated this key reversal session or potential key reversal session. Remember, until the market closes, we won't have that. But as of 118, I'm describing to you the candle session that is currently in place inside the market, which is a bullish reversal candle. Now, we haven't seen a bullish reversal candle inside either of these indices for some time. And when they come at the completion of a pattern, an A to B equals CD, they then at a minimum tell you that you've got some type of retracement of that pattern that is going on. And again, we're looking at the Russell 2000 right now. I'll go ahead and put up the ES and the YM, but you can see that today's session has exceeded the prior session, December 24th. That doesn't matter whether it's a short day or not. It just simply has exceeded both the high and the low, and we know that this is an extended condition. Whereas if you and I go ahead and take a look at the ES Mini, and not that it's not worth anything, but what we can see here is we really have an inside day, so to speak, out here. We don't have a bullish reversal candle inside the ES Mini. That's why when I gave you that Perigee number come the end of the day, that will be helpful to you because we may not get that bullish reversal signal, but we might get a close above a significant area of resistance. Inside the Dow, I'll go ahead and put the Dow equity futures contract up here, and what we'll see as well is very similar to what you and I are looking at inside of the ES Mini. So we've got two that have given clear signals and two that are just kind of sitting on the fence, so to speak. And that's why you and I just simply go back and we take a look at numbers like 6101.50 and 1300 inside of the NASDAQ equity futures contract and the Russell 2000 equity futures contract to go ahead and give us the all clear signal or not so fast. It's going to be one or the other. Now, if we take a look at what else is going on in the market, well, let's do this. Let's take a little look at history out here. Let's do that because earlier today, when the S&P 500 made that lower low, give me a second here to start this off right here. What it did was it finally got into that qualification as bear market territory, which means nothing more than a 20% decline. Now, whoever came up with that definition certainly did not know about Leonardo Fibonacci. You and I take a look at 0.618 retracements and 0.786 retracements as being just normal. But look, in this case here, let's just go with the flow. And the flow says that since 1973, the S&P 500 has had 10 bear markets. 10 bear markets. That's approximately one every 4.5 years. Now, what you may know, or you may not know, because most people wouldn't tell you this, but Stevie's going to tell you this, that the last bear market for the S&P 500, when do you think it took place? Now, many people are going to say, that's an easy one, 2009. And Steve would say, not so fast, because that's not true. Because we did see a 21%, 21.6 to be exact, drop from peak to trough back in 2011. That's right, in 2011. So at this stage here, from peak to trough, right now inside the market, we've seen a 20.1. That 0.1 giving it that qualification that it's in bear market territory. Now look, here are the charts so that you can see them. You can go back, you can do the work yourself. And here you can see that we are seeing the second 20% or more decline since the 2009 bottom. Remember, we went back to 1973. We took a look at how many bear markets have there been. There's one every about 5 years out here. Well, let's see. The 2009 bottom, we're going into 2019. Seems to me like, in essence, it's right on track. Something to think about. You mean a bear market doesn't mean it's over, Steve-O? Well, if we take a look at the prior three bear markets out here, the declines from 1990 to 2000, two of those lasted for 12 weeks or less. By the way, the one that we're in right now, we're in week number 14. Did I say 12 weeks or less? Oh, I just said what the charts told us, 12 weeks or less. Now, of course, inside the Y2K bear market, you know, the 2000 bear market, that lasted for over 2 years. That was 133 weeks from its peak to its trough out there. And we can continue going back into that 1973. We can see those other 5 bear markets that occurred between 1970 and 1987. And just in case you're wondering, what is the quickest in a weekly time period bear market? It was not in 1987. That was back in 1979, 1980. There was a 6-week period of time where the market lost 21.6%. By the way, was that the beginning of the end? No, it was not. The market continued to move higher out there. And in fact, in 1987, you know and I know, but most of the world doesn't know, it was a bad day. It was a horrible day. It was a horrible period of 8 weeks out there. That's for sure. Turns out, though, it was the buy of a lifetime. Yeah, the buy of a lifetime. But there's going to be another one that's coming up here. Look, if we take a look at that 1974 bottom, this is the one that I think is the most unique of all the bottoms out there. You know how people say gaps get filled? Well, think again. Because the bottom, this is a weekly chart. We've been looking at weekly charts out here, by the way. This is a weekly chart for the S&P 500. And guess how it formed its bottom? And you don't see this very often. In fact, you hardly ever see this. But it formed its bottom with an island reversal. An island reversal bottom. That gap hasn't been tested. It's never been filled. It's never going to be filled out there again. That's, of course, in that 60 area out there. Yeah, 1974. So, Stevie,
TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us. We have the Dow Industrials right now up 6.
You better talk quick, man.
6 points?
You better talk quick. It's about to hit the red. My goodness. Okay.
Instead of buying the dip, folks, just sell the rip. NASDAQ's up 49. S&Ps are up 15. Gold contract up $7.80, trading at $12.79 an ounce. We got silver up 30 cents, $15.12 an ounce. We're going to get into that silver. We'll see if silver finally got a sign of strength here. It has some price behind it for sure. The oil contract's up $1.47, $43.98. Now that's, I gotta look at that thing, man. That means that went down to.
Can I just jump to it real quick because I have it up and we'll see the live because I was checking it out earlier, man. Jumping around because it was quite a number and it was only about an hour and a half ago. Check that out.
Look at that.
So 8:30, we were down.
42.76.
Yeah, and then really you want to you back it up even further. That was the acceleration on Monday, but it kind of hung down there all the way until this is last night, Wednesday. So it was down there at 42.50, but the acceleration right at 8:30, quite a rocket ship, up to 44.41. From there, we're off 60 cents though from that high as well. Volatility everywhere.
You get the note and bond market. 10-year note is up a tick, a 121.14. 30-year bond up 3, 145.17. King dollar up 173 ticks, 96.180. The euro is at 113.98. 1 US dollar. The yen is at 110.49 to 1 US dollar. Now, if we get over and take a look at the small caps, folks, what you're going to see out here is this, and this is the big danger in the marketplace. November 2016 is coming at us, man. And the small caps already got there. You talk about fast and furious, man. So the small caps have been the weakest and actually has led all the way down. But what you're going to see here is pretty dramatic because, you know, first we were talking about the aspect of, okay, the high volume February low. You know, NASDAQ, the small caps went after that bottom line of, well, that's 2 weeks ago, took it apart. And then we started talking about this November number, but it's amazing how fast it got down there, man.
Sure.
You know, the small caps right now, the high of that November bar is 1282.
And that's November 2 years ago. It's plus 16, right?
And we're trading 1279.
Yeah.
Now, if you get over and take a look at the S&Ps, this is where the bottom line is that this is where I expect we're going. And this is what the danger is in the marketplace. If you think that this is a downdraft, which it is, you know, the S&Ps are off 20% from its highs of October. But what you're going to see is that this level here is just like scary. That level there, the top of the level is 2182. Well, it's only 200 points down from where we are. You know, and I guess
always a relative term, right?
Well, it is because, like, when you're looking at from where we're down from the week of the 21st of September, we're at 2940.
Yeah, right. No, I hear you.
Pretty intense.
Yeah, that's 525 points.
Let's go look at that silver market. So silver out here, well, it's going to be interesting here that, you know, all the numbers that we go through, economic numbers, right?
Yes.
We're not going to be having those now because the Commerce Department come out and bottom line said that because of the shutdown, there's going to be no economic numbers coming out.
Okay.
Which is going to be really wild.
Somebody's got to get paid to do them, so I understand. Right.
It's going to be wild for the market, though.
Yeah.
You know what I'm saying?
Oh,
it's
for
like,
sure.
you know, fundamentalists are definitely going on those numbers, man.
Oh, for sure.
Silver. Okay, we caught a bid.
And that relates to more of the energy, right, versus silver. I know we're jumping to silver, but you're talking about the EIA numbers. What are you talking about? Are you talking about GDP? You're talking about
retail numbers, housing numbers.
Okay.
All these numbers come out of the Commerce Department.
Right? No, yeah.
So that we're not going to be getting them. Okay, so silver. Silver, this is good, man. Look at this. What took silver off? Finally.
Well, gold had a nice little
And this
boost,
is what we needed, yeah. But this is a good sign of strength, man. This is, you got 40,000 contracts. It looks like it's taken out the whole consolidation. Top of that is 1526. I like it. So 1505. This is good. You know, this thing, I want to see it get inside 1545, but this is a nice takeoff. And this is what silver needed. Silver's been the laggard in the metals market in a huge way. Well, actually, the real laggard is happens to be platinum.
Yeah.
But,
Okay. You tell me when. Give me the thumbs. Oh, sorry about that, folks, but looks like we've got our technical problems figured out there, maybe inside the Tiger's Den. Good, Jose's got a yes. So here's the problem. I don't know where I cut off, and I don't want to repeat myself, but I think in this instance here, I must. But I'll try to do it in a quickly and orderly way out here. And so I just want to make sure that we understand from a historical perspective what's going on out here. And so if we take a look at the last 45 years, that takes us back to 1973. What we know is that there's been 10 bear markets, about one every 4.5 years out there. Now, the last bear market for the S&P 500 actually took place in 2011. And by bear market, we're just using the standard garbage formula that it's got to be a 20% or more decline. And so if we take a look at the last two bear markets since the 2009 low, figure 2009, we're just about to enter 2019, and now we have our second bear market. Here we go, about one every 4.5 to 5 years out there. Now, the bear market decline in 2011 from peak to trough was 21.6%, lasted for 23 weeks. Right now, we're in week number 14. The 2007 bear market lasted for 74 weeks. That was a 57% decline. If we take a look at prior to that, we've got the Y2K bear market decline, lasted for over 2 years, 133 weeks to be exact. But prior to that, there were two other bear markets that only lasted 11 and 12 weeks. Each of those, we had 20.3%, a 12-week, and a 22.4%, an 11-week out there. So we can't rule out that what we're seeing here is another bottom, that it's only taken about 14 weeks. It has happened before. And by the way, these are not the shortest bear market declines. Again, 20% or more declines out there. If we take a look at the other 5 bear markets since 1973, so we're looking between 1970 and 1987. In 87, it was an 8-week cycle out there, 35% decline. And of course, whenever, and I could not tell you the number of times this weekend at parties out here where people talked about feels like 1987. And I just let these folks go on and talk about it. And I said, so 1987, which absolutely was a terrible decline out there. Most people would have thought the sound is gone again. Put the stake in my heart, like in the same spot out there. Oh, man, what a bummer. Sorry about that, guys. I don't know what to tell you. I can't even tell if I'm still online or not. I think I am. Must be in the den. It must be in the den. So I'm just going to continue going here until told otherwise, because it looks like I'm still alive. I guess the point I want to make out here, let me just get to the point. And the point is this. If we go ahead and cut out some of the noise, we just take a look at an annual chart out here. What we're going to see is between 2000 and 2013, there was a consolidation move. And that consolidation means when you break through it, you usually make a move equal to or greater than a consolidation. The S&P 500 went on to make more than that. We can see that by taking a look at these measured rectangles out here. The interesting thing about this is the pullback. The pullback is right to the top of that measured move out there. Now, I've never used that before as a level of support. I just find it interesting out here. Certainly for a level of support, for those that say that this is the worst bear market ever, or whatever it might be, they're just simply not paying attention to the longer-term trend out here. And that's just taking a look at that green diagonal line out there, and perhaps that's where price is going to head to. So sorry that we've had some problems going through this piece of the presentation. We don't want to do it a third time. That is for sure. Okay, good. So it's on Tiger TV the whole time. If you guys want to, you can go back and take a look at that. So a request that's in here, let's go get to the end. Lip reading, that's always a tough thing to do. But let's go ahead and take a look at, Ruby wants to take a look at oil. So for Ruby, let's go do that. We'll take a look at the at light sweet crude. Let's see what it is doing. It's having a bounce, having a pretty decent bounce out here. And, you know, the big problem here, Ruby, is that we don't have I don't have a set of profiles on a daily or weekly basis to really assist you with this chart right now. You're still trading. You haven't taken out the highs from Monday, right? Yeah, Monday, from Christmas Eve out here. So unlike when we took a look at the NQ and the Russell 2000, which had taken out the highs, you haven't done that on a daily basis out here. That doesn't mean that there's not more to come to the upside or that there's not more of a bounce out here. If we were to rely upon the 4-hour time frame chart, let's do that. What I would say is make sure that price stays above 43.91. That should be a level of support. It was resistance. 43.91 is probably the figure that I would be looking at out here. If we take a look at light sweet crude, you got to be somewhat cautious here, because even on an hourly time frame chart, this has just simply made a 100% move of a move on a retracement. So in other words, you'd really like to see light sweet crude get above the we'll call it $47 mark out here. In order to continue a long trade, if that's what you're doing. So I think we're about to go to a breakout here, try to get back on schedule. This is Steve Rhodes with TFNN. The Dow trading up 450 points, S&P's up 52. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Thanks so much for sticking with us through those technical difficulties, and thanks to everyone that was writing in emails to me to let me know we were down, we were back up, and so on and so forth. And I apologize. We'll make the next 18 minutes or so very worthwhile. Try to make it worthwhile. Now, this chart here is a weekly chart for the NASDAQ Composite. And this is taking a look at if I want you to look at the center panel out here, the center panel on this is the advanced decline oscillator. Again, an oscillator is nothing more than the difference between two fields of energy, so to speak. In this case here, we're using exponential moving averages as our fields of energy. And the two that we're using are 19 and 39. And we take a look at the difference between those two, that gives us an oscillator reading. If we take a look at this on a weekly level, this, at least according to my records, as far back as the E-signal data will go, which is 1970, no, I take that back. It's not till 2000 out here, is the lowest level that it has recorded. Now, what does that mean? So when you talk about being in an oversold market, an extended condition, well, this is one of the ways that you can measure it. But what's more important is you can go back to the prior extreme conditions out there and say, hey, what did they do? Is there some type of pattern? And it's very possible that there is one of those rip-your-face rallies that is unfolding here. In the very first segment when we were live, I gave you some numbers to focus on, pay attention to, come the end of the day, so you can use those to help answer that question. Now, what's likely to occur here in a rally phase is that the advanced decline oscillator reading will get up to 0. If it gets up above 0, well, then that tells you that there's more rally to come. Now, before this morning, and I spent yesterday just on and off, and Christmas Eve on and off, so to speak, looking at some charts and looking for any signs of a bottom. There were none. I couldn't find any in the set of tools that I use. Yeah, I could come up with all types of oversold conditions, being at extremes, such as this one here for the weekly basis. But this morning, early this morning, at about 4:30, when I came to look at my chart screens, I said, we just had our first sign. Now, you know and I know, that's a Dave Mason tune out there. Actually, those are the words from it, not the actual tune. But you and I go ahead and we utilize the time to mark setup counts out here. And those established trend lines, either bullish or bearish. In this case here, the green lines are representing the bearish trend line, so to speak, or what we'll call a level of resistance. Now, if we take a look, this is a 30-minute chart that we're looking at. But on a 30-minute basis is where the first clue came from that we were going to see some type of rally today. Why was that? Well, because if you take a look at all these other green horizontal lines, they occur basically at about, figure the 1 count of a time to mark setup 9 count to the downside. I've taken off all the digits and everything out here just so you can look at the trend line to understand it, to see it more easily out here. And what we can see is beginning December 3rd, we never saw price close above one of these TDSTs is what they're called out there. But that sounds like a disease. It's not a disease. It's an extraordinary tool. It's an indicator, not a trading strategy. It's an indicator out here. Well, at 3:30 this morning, right on the dot out here, this is when we saw our first close above that resistance level. And then we saw take place out here at 11 o'clock this morning was price pull back and test that old level of resistance, which became new support. Now, look, I don't use the prior green lines. There's other green lines out there. I don't use those as additional levels of resistance. Instead, what I do is wait for new lines to form, support or resistance, and go take a look at longer time frames and so forth. So in the case of the ES Mini, as Steve goes ahead and he changes his workspaces out here, we'll go ahead and take a look at the 60-minute time frame. Now, in the 60-minute time frame, this is going to be the more traditional look that you see out here, which are candles instead of bars. And you'll see TAS market profiles, and you'll also see some red dash lines and some green dash lines. Well, on the 60-minute, price also closed over that resistance zone out here. So everything here, if we combine that with the oversold conditions, is saying more counter trend rally. Now, the reason that I'm saying this and sharing this with you is because some of you may be still short from way up there, and maybe it's a long-term short. I want you to be able to anticipate what is going to unfold today if certain levels are met. That's really all that I'm trying to do. What's another level that you're going to focus on and pay attention to? Probably the spot volatility index. It's trading down by $9.43. Yeah. Is that? No, it's trading down by $3.37. Just shoot me. I'm just kidding. Don't do that. It's trading down 9%, minus 9% out there. So what we really want to take a look at is, does today really, and you somehow passed grammar school, look to see if today there's a close of minus 10% or lower, because if there is, then in the New York Stock Exchange lingo today, or in the spot volatility index lingo as well, this would be considered a initiation day, an initiation to higher prices out there. So you take a look at that. You take a look at what we looked at on the short. Now, that doesn't mean there's not going to be more selling that goes on. It's very hard for me to believe at 148 that all we saw was one wave of selling, and that's it. It's over. I don't think so. Maybe that's the case, but I don't think so. But nonetheless, I want you to be able to really anticipate what the market is communicating to you and I. We talked about 610150. We talked about 1300 and how those were key levels. You're the only one that knows these levels, for the most part. There's a group of traders that I know, but I don't really know for sure, but I'm pretty sure that they know about it too. And when they know about it, and when they see these levels fail, I can tell you one thing: they're not on the other side of that trade out there. Instead, they just lick their chops and they just keep pressing it to the upside. So the only thing that's left here is for the ES Mini to go ahead and get above its key level of 2424, and the Dow 22503 would be the number. Then what we could say is everybody's got the memo, and prices are going to continue to move higher, and the old rip your face off rally will continue. If we take a look at Goldilocks out here, had made higher highs, did it in US dollars, did it in euros, didn't do it in yen, did it in pound sterling out here. So even though we've seen a pullback, it's not exactly as if I'm seeing traders across the globe get a little twitchy, get a little nervous out here. That is not what I am seeing. Now, that'll be the case as long as gold continues to close about 1256.60. You're 1270.90 as we speak right now. So everything here looks to be okay, so to speak. The level to be paying attention to and watching, though, is probably going to be inside the mining. Well, we'll come back to this. It's probably going to be inside the mining equities. And it's really going to be an end-of-week level that you're going to want to be focused on and paying attention to. And what I mean by that is GDX, let's push this up out here. And last week, there was a close below resistance. Resistance was that gap to the downside. It was at 2051. What you're looking for this week is a close above 2051. You close back below it, not really ideal. It tells you there's significant resistance at 2051. I guess that's the bottom line. We come back to this break. Let's finish it off by looking at Apple. giving us a nice bullish reversal signal on the daily and maybe week.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. What do you figure? Up 850 by the end of the day inside the Dow? Hey, let's go take a look at Apple out here. So on a daily time frame for Apple, you've got a bullish reversal signal. Now, you'll know if Apple is out of the woods, or should be out of the woods, if it can close above Stevie's red line. Stevie's red line on Apple right now looks like about, let me put this other tool up here. I'll give you the exact number. Let me get my cursor over it. It is, what the heck? 153.68 is the number. 150 in your trade and 153.06 right now. So 153.68 is the number. Now there's plenty of A to B equals CD patterns inside of Apple. That's not what is as important. And there is a possibility that this is a significant bottom that has formed inside the NQ outer. Remember, it's a Gartley buy pattern today. All holy heck has to break loose, and not that that can't happen. But if it doesn't happen, it is a Gartley buy pattern. With regard to the weekly time frame out there, we talk about those Tom DeMark set up 9 counts out here. Oh, this is the daily time frame. What we really want to do is take a look at the weekly time frame chart. And you and I know that last week we kept saying to ourselves, hey, man, this thing is getting into that 9th count. Now, in the 9th count out there, it doesn't work all the time. Still haven't found that one universal tool that works all the time. But you find the tools that work a predominant amount of the time, a high probability of the time, and then you pay attention to them when they occur out here. Last week was count number 9. And what we know about the Tom DeMark setup system is that either days 8, 9, or 10, or weeks 8, 9, or 10 are where you see a change in trend. And so you got that lower low today. Well, you got it really on Monday inside of Apple. You're looking for a potential reversal. And this says on a weekly basis, Apple is projected to head up to Stevie's red line. That's about the 185 mark. It'll fall lower, but around 185, you're only 152. That'd be a heck of a move. Steve Rhodes with TFNN. Stay tuned, folks. Your favorite polar bear, David White. He's up next. I'll be back with you tomorrow on Terrific Thursday. Thanks so much for being here, putting up with some of the technical problems that we have. Have a great Wednesday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.